Good afternoon, all, and a warm welcome to ALL. I am Sudhakar, Associate Director, and on behalf of Care Ratings, welcome you to our today's webinar on competitiveness of gold loan NBFCs. And sincerely appreciate your time in joining us for this webinar. Please be informed we will be having a Q&A session post the guest speaker's presentation. In case of queries, please key in your queries. May I request Mr. Sanjay Agarwal, who is a Senior Director at Care Ratings, to take over the proceedings, please.
Thank you, Sudhakar. Good afternoon, everybody. The topic for today is competitiveness of gold loan NBFCs. During times of COVID-19, many of the NBFCs across different asset classes had reduced or stopped disbursements. There were almost no disbursement during Q1 FY21 due to lockdown restrictions, and the focus was only on the collection. At this juncture, loan against gold ornaments had become one of the easily available sources of funds for household and small businesses. Many of the gold loan NBFCs started showing good AUM growth in Q2 and Q3 FY21. Further, availability of online gold loans has helped the industry penetrate into newer customer segments during this period and improve the ease of availing the same. Gold loans has emerged as one of the asset classes which had little or no impact on asset quality due to COVID-19 pandemic-induced economic slowdown. In the recent past, though some of the banks and SFBs witnessed good growth in gold loans, the performance of gold loan NBFCs has been exceptionally good. While the various risk mitigation steps taken by these NBFCs helped the industry to maintain good asset quality, the competitive position of gold loan NBFCs enabled the industry to report good growth in AUM and good profitability. Recently, a banker friend of mine remarked that in India, gold loan is one of the most inclusive financial products. It touches the bottom of the pyramid, and bringing gold loans to organized sector under RBI supervision helps, inter alia, the poorest of the poor. Also, along with us, we have Mr. VP Nandakumar, MD and CEO of Manappuram Finance Limited, to give the industry perspective on the same. Manappuram's origins go back to 1949 when it was founded by late Mr. V.C. Padmanabhan, father of Mr. Nandakumar. In those days, the firm was into money lending and pawnbroking carried out on a modest scale at Valapad, a backward coastal village in Thrissur district of Kerala. Mr. Nandakumar, with his pioneering vision, incorporated MAFIL in 1992 and transformed it into a financial sector powerhouse. In recent years, Mr. Nandakumar has steered the company's diversification into microfinance, home loan, vehicle finance, SME, and personal lending to reshape the company into a full spectrum NBFC group with an AUM of over 24,000 crores. Mr. VP Nandakumar also established the Manappuram Foundation at Valapad in 2009 to drive the corporate social responsibility program. The foundation oversees a wide range of projects in education, healthcare, and overall development of the rural communities. Now, going back, the presentation by CARE on competitiveness of gold loan NBFCs will cover the following points: the industry overview, gliding through the challenging COVID-19 environment, and competitive position of gold loan NBFCs. I now hand over the proceedings to our Associate Director, Mr. Sudhakar, who is from our Chennai office. Over to you, Sudhakar.
Thank you, Mr. Sanjay Agarwal. Now we will move on to the presentation. Industry overview. In this section, we will cover the topics such as types of gold loan players in India, difference between the players in the gold loan industry, aggregate growth rate of large players over the last few years, and what has resulted in stronger asset quality for the gold loan NBFCs. Now let us move on to the type of gold loan players in India. Broadly, we can classify the players in the gold loan sector as organized and unorganized. Organized sector comprises of banks, small finance banks, cooperative banks, NBFCs, and Nidhi companies. Unorganized sector include the local money lenders, pawnbrokers, and landlords. Difference between the organized and unorganized players. There are several differences between the organized and unorganized gold loan players. We have listed out four major differences among others. First is the rate of interest. Second, the LTV norms, that is loan to value norms. Next, safe custody of gold. Organized players have a well established setup in terms of security infrastructure and insurance, which ensures safety of the pledged ornaments, whereas the unorganized players may not have such strong infrastructure in place. Finally, the regulation. Out of this organized players, Nidhi companies are regulated by Ministry of Corporate Affairs, whereas the all other players are regulated by the Reserve Bank of India, whereas unorganized players are not regulated. Aggregate growth of gold loan portfolio in NBFCs. This slide gives you the details of top NBFCs with gold loan AUM of more than 1,000 crore as on March 31, 2020. The growth rate has been significantly higher in the last 2 years, that is in FY19 and in FY20, with FY20 recording growth rate of around 25% year on year. Though the industry witnessed high growth with healthy profitability in recent years, the foundation for the same was laid few years back. Gold loan NBFCs created stronger base with strong significant expansion during the period from FY 2008 to FY 2012, mainly driven by branch expansion. High volatility in gold prices in 2012 has adversely impacted the profitability and even recovery of ultimate principal in some cases. This has forced the industry to consolidate its growth. This, coupled with major regulatory intervention by RBI, had set the base for new phase of growth with low credit cost and healthy profitability. Regulatory change leading to stronger asset quality. The asset quality became stronger with the evolution of the industry in line with the regulations of the RBI with specific to gold loan NBFCs. RBI brought in the LTV restriction initially with a maximum LTV of 60% during March 2012, which resulted in significant impact on the AUM of gold loan NBFCs, which did not have any restriction on LTV earlier. RBI also brought in reforms such as security infrastructure requirement for gold loan NBFCs, standardization of LTV calculation, restriction of branch expansion above 1,000 branches during September 2013. Restriction on branch expansion resulted in gold loan NBFCs rationalizing their branch network by focusing on shutting down non-remunerative branches, which has resulted in improving AUM per branch of the existing gold loan NBFCs and has also in a way become an entry barrier for other NBFCs to enter into gold loan segment. RBI later increased the LTV cap to 75% for gold loan NBFCs. One of the major advantages of gold loan NBFCs is the physical possession of the underlying collateral, that is gold ornaments, which enables gold loan NBFCs to initiate and complete the recovery within short time as they have a right to auction the gold once the loan becomes overdue. Further, to avoid losses arising out of auctions, gold loan NBFCs have introduced shorter tenure products, lower LTV for higher tenure products, and periodical interest collection. Moving on to the next slide section on gliding through the challenging COVID-19 environment. The impact of COVID-19 on gold loan and NBFCs. The first and foremost impact came for the branch operations. Gold loan NBFCs entirely depend upon the physical branches for new pledging and release. During the first lockdown, gold loan NBFCs were not able to open the branches, which affected the business completely. However, online gold loan continued to operate. Subsequently, the branches started operations from April 2020 and opened based on the local restriction, and it took some more time for the branch operations to become normal as different states, cities had different restrictions. Business growth. The business growth was not coming through increase in new pledging and came majorly on account of movement in gold prices. Repayments. With restriction on movement of people, even there was impact on the repayment and release of gold for the branch from branches. Our repayments through digital payments were still happening. Fund availability. Initially, there was no clarity on the liquidity in the system, though unavailed credit lines were available for these companies. Thanks to TLTRO and PCG schemes, which resulted in huge liquidity available in the system. Higher traction in online gold loans. Online gold loans has been evolving in the last few years, and this became one of the periods where there was a higher utilization of online gold loans. AAM growth comparison of banks, NBFCs, and gold loan NBFCs. If you look at the past 11 quarters ended December 31, 2020, bank credit growth rate has been lower than that of NBFC's growth rate. During this period, the growth rate of gold loan NBFCs stood higher than the banks throughout the period and that of NBFCs in many of the quarters. Loan against gold ornaments had become one of the easily available source of funds for households and small businesses, especially when economic activity resumed post lifting of lockdown. Growth rate of gold loan NBFCs started showing improvement immediately post a lockdown in Q2 FY21 as compared to credit growths of banks and NBFCs. AM in relation to gold price and gold holdings. AM growth of gold loan NBFCs is directly proportional to growth in gold holdings and price of gold. The increase in gold prices will attract existing customers towards pledge and renew the gold loan at new prices. This results in increase in AUM. However, when gold prices remain stable, the movement in AUM is directly related to extent of growth in gold holdings. In the past 11 quarters ended December 31, 2020, AUM of gold loan NBFCs witnessed quarter-on-quarter growth of minimum 4% in all quarters except in Q3 FY19. During Q1 FY21, AUM almost remained flat with increase in gold prices despite decline in gold holdings. Subsequently, AUM increased significantly during Q2 FY21 with increase in gold prices. During Q3 FY21, AUM growth was lower due to fall in gold prices despite the slight growth in gold holdings. Considering the sharp fall witnessed in gold prices during Q4 FY21, AUM growth is expected to remain muted in this quarter. In this section, we will be discussing about the competitive position of gold loan NBFCs. Now, I request Ravi Shankar to continue the presentation.
Thank you, Mr. Sudhakar. Competitive position of gold loan NBFC. First is the interest rate. Within the players, banks charge lower interest rate than the other lender categories, whereas unorganized players charge higher interest rates. Gold loan NBFCs offer rates somewhere in between these two. LTV. LTV norms of both NBFCs and banks are capped at 75%.
Slide, please.
LTV norms of both NBFCs and banks are capped at 75%. Currently, the banks are allowed to offer gold loans up to 90% LTV until March 2021 as part of the COVID relief measures. This is not offered to gold loan NBFCs. With respect to unorganized gold loan players, there is no LTV cap and the interest rate increases as the LTV increases. Timings. The timings of gold loan NBFCs are flexible and available throughout the day, whereas there is no flexibility on the timings for the gold loans offered by banks. In terms of focus product, gold is not the core focus product for the banks, whereas it is a core focus product for NBFCs. NBFCs and unorganized players have a quick processing time with simple KYC as it is their core product, whereas the processing time for gold loans in banks is longer. Now let us look into the profitability aspects. Interest rates. Interest rates likely to remain high. Interest rates across the major gold loan NBFCs range from 6.5% to 14%, which is the average over the last 3 years. Yield on advances of larger gold loan NBFCs are high and almost comparable to some of the unsecured asset classes. But smaller gold loan NBFCs provide loans at slightly lower rates. High yields arising from relatively small ticket size of loans, wherein the rate of interest has not been a major decision making factor, whereas convenience and ease of getting a loan is the major factor. Larger size coupled with strong credit profile command low cost of borrowings, resulting in higher spreads. Also, majority of the borrowings of the gold loan players are mostly short term in nature. High yields are likely to sustain as the convenience outweighs cost for this segment of the borrowers. Cost of funds is likely to remain stable given the stronger credit profile of larger gold loan NBFCs. Now let us move into the operational expense, which is high in relation to the other NBFCs. Operational expense are relatively higher in the gold loan NBFCs due to the reasons such as: first, gold loan is a product where the customer has to walk into the branch to pledge the ornaments. So there is a need for compulsory physical presence, unlike other NBFCs. That too, the branches should be present in the prime location, which results in higher rental expense. Such physical presence results in daily and monthly operational expense such as rent, maintenance, etc. So every gold loan branch also requires at least 3 people to operate with at least one gold valuer, resulting in higher employee base and expense. Finally, the cost associated with the security infrastructure. RBI has mandated the availability of appropriate infrastructure for storage of gold ornaments by NBFCs in September 2013. Since then, there has been significant changes with respect to security infrastructure. Most of the companies have capital intensive storage spaces with security alarms and CCTV cameras set up across all the branches. Security infrastructure has been one of the key hurdle for new entrants in this sector. The existing large players have undue advantage over the other players in this aspect. With the use of technology in the security aspect, the requirement of physical security guards have been reducing, and the recent trend in OPEX of major gold loan NBFCs reflect the same. There is not much difference between the larger players and the smaller players in terms of OPEX, and the average OPEX of the top 5 gold loan NBFCs over the last 3 years remain at around 5.5%. Overall, there is no major changes expected in OPEX unless the companies are able to improve AUM per branch further. Now let us move on to the credit cost, which is low. Gold loan NBFCs have physical possession of the underlying collateral, that is the gold ornaments. So the entities also have a right to auction the gold once the loans become overdue. The major risk that gold loan NBFCs are exposed to is the under recovery in the auction, which may result in principal or interest loss in case of fall in gold prices and inadequate asset coverage. However, the same has been mitigated by measures such as shorter tenor loans, lower LTV for longer tenor loans, and periodical interest collection. Lower credit cost is one of the competitive advantages of gold loan NBFCs. Average credit cost of the top 5 gold loan NBFCs over the last 3 years remain at less than 0.4%. Credit cost is likely to remain low as long as the present cap of LTV is maintained and the recovery steps are initiated in early stages. And finally, on the profitability aspect, the return on total assets. ROTA is influenced by the following aspects: higher spreads supported by high yields and low cost of funds. 2. OPEX, which can be controlled by use of technology and improvement in the economies of scale. 3. Control of credit cost through risk mitigation strategies. Average ROTA of the top 5 gold loan NBFCs has remained different for top 2 and the next 3. Top 2 players are able to generate better returns. Now let us move into the credit outlook. Profitability of larger gold loan NBFCs are likely to remain strong, while the profitability of smaller gold loan NBFCs, though remain moderate, might improve in the medium term with significant reduction in the borrowing cost across the system. Use of technology in the form of online gold loans has gained traction across the gold loan NBFCs. Gold loan pledging and removal alone happens at the branches. Then the customer can avail new loan or renew the existing loan from mobile app or website anytime. Even the interest and the principal payments can be made through web or app. So technology is expected to drive the growth going forward. The credit risk profile of larger gold loan NBFCs is likely to remain strong on account of strong balance sheet and various risk mitigation strategies adopted by these companies in the past few years. As we had mentioned in the previous webinar a year back, AUM growth in the recent past was majorly due to movement in the gold prices. Also, with gold facing headwinds in the recent weeks, further growth in gold AUM in the near term will majorly depend only upon the increase in gold holding, and AUM is likely to remain flat during the quarter Q4 FY21. Nevertheless, in the long run, competition from scheduled commercial bank and small finance bank may pose threat for the AUM growth of gold loan companies. But still, as per the recent report by WGC, organized gold loan market accounts only for 35% of the gold loan market, and so there is still a huge scope of improvement in terms of AUM growth which is available. So over to Mr. Sanjay Agarwal for reintroducing the guest speaker.
Thank you, Ravi. Can you move on to the next slide, please? Yeah, we'd like to now request Mr. Nandakumar to provide his presentation. As I had said earlier, he's the MD CEO of Manappuram Finance, and he's grown this business into a powerhouse from 1986 when he took over the business. He is a managing committee member of leading trade associations, and he's also in the board of IM Kozhikode as one of the in the board of the governors, and he is elected as the international director in the Association of Lions Club at its Milan convention. Thank you, sir. So can you please take over the proceedings?
Thank you, Mr. Sanjay, for the opportunity. The presentations are made very well by your team. So most of these are covered, but I have a small presentation. Most of these are already covered by you, but still, if anything is to be found out, it will be good. I will go through these five presentations very quickly. Yeah. Have the presentations, please.
Next slide, Ravi.
Can you move the slide? Yeah. So this has been told. The WGC, the report says half of the gold, the demand for half of the gold is coming from China and India. And India accounted for 16% of the global demand. So over the past 2 decades, if you take, there is a range-bound demand of 700 to 900 tons per year. This is sustained over the last 20 years. And the two-thirds of the gold coming to the country are going to the rural and semi-urban markets in the form of jewelry. And I am relying mostly on KPMG report. The total gold outstanding in the organized sector was less than 5% of the total gold holdings in India, indicating a significantly low penetration for the industry. There is good room for growth. And the unorganized sector, that is pawnbrokers, money lenders, etc., they hold two-thirds of the gold loan portfolio. Next. And key drivers for demand for gold loans. So one is banking products not easily accessible to rural and lower income group. Even with a very high penetration now, still a large number of rural population, all the banking products are not available. And the rising consumerism, this is very important because with the rise in this consumerism in rural areas, the demand for gold loan is also increasing. And the changing attitude towards gold loan. The perception here is very important. Earlier, this was considered as a distress product. So, in the event of any urgency, any emergency, like medical emergencies are used. Now, it is slowly changing to a lifestyle product because of the awareness about this market and the technology with which it can be used very easily, etc. And increasing penetration in non-South geographies. South geography, there is a large penetration, but non-South, which is the larger geography, is still remain very lowly penetrated, which is a great opportunity. Then availability of gold loans on flexible terms. There are EMI products, there are short-term products, long-term products, the technology-based products, even loans at doorsteps, etc., etc. Next. I mentioned about very low penetration, which gives ample opportunity for the organized NBFC lenders. So the other big opportunity, as I mentioned, is the unorganized sector's presence, which commands two-thirds of the gold loan portfolio. The advantage here is what is their advantage? They are available perhaps around the clock, and there is no LTV restriction, etc. But the attractive feature for the organized sector is a lower interest rate and the availability at the restricted time. So if you take the banks, their time is very much restricted, 2-3 hours a day. Whereas the unorganized sector, there is no such time. And so the NBFCs stand in between. Their time is more flexible. They are available for 8 hours a day, including Saturdays, etc. So NBFCs NBFCs place here is in between the unorganized sector as well as banks. And this demand GST and other pandemic situations, yes, that has hastened the process of formalization, because these difficult times, the people had the opportunity, people needed money. So the digitalization has become something very handy to them. So availing unavailed portion in the gold loan using their online. process. So this formalization is actually helping the NBFCs also to win the customers from the unorganized sector. Then, the report also says the gold price may fluctuate in the medium term, but we have seen a sustained growth in gold prices over the past few years. Next. So the advantage of gold loan NBFCs, as mentioned in the presentation by Care also, with the depth of the reach, the large brand network, and then even with a brandless model like online gold loan, not delivery of gold loan, etc. The operating costs, I'm not talking about OPEX to AEM, but the other operating cost for a bank, it is very high compared to an NBFC. So for an NBFC, the cost is lower and also the reach is very high. Then for the banks, they resort to outside valuers. They outsource the appraisal, whereas the strength of the gold loan companies are all their employees at the brand level have the appraisal skills. And regarding documentation, the banks survey, the documentation process takes lengthy and more KYC compliant. Whereas NBFCs have a simplified KYC compliance. And these are done very quickly, and the technology also helps. And very quicker turnaround time. NBFCs usually take at a maximum of 15 minutes, whereas usually in a bank counter, a customer has to spend around an hour. And the repayment flexibility for NBFCs, these are the advantages. Next. And working hours, as I mentioned, the banks have limited working hours for the customers. They often prefer the customers not to come. For that, they offer several facilities like any time 24-hour ATMs, etc., etc. Whereas the advantage for the NBFCs, they are willing to accommodate customers at their branches and serve them for 8 hours, 9 hours, etc. And the niche customer base. So these are the advantages, and given high margins and negligible credit costs, the specialized NBFCs have a high ROE. And the advantage over NBFCs in product segments, other products. Here, less competition from the banks, as we have mentioned. Second, low asset quality risk here. And the third, the strong ILM position, the liquidity of these companies are very high because the average tenure of a loan for NBFCs is around less than 3 months only, average life of the loan. And for these companies, particularly large companies, very low balance sheet leverage. Next. These are the comparison between banks and gold loan NBFCs. Yeah, the first item, LTV the same, other than the 90% offered allowed for a temporary period for the BSL category. The second is the processing fee. Generally, NBFCs don't charge any appraisal charge or processing fee. They charge interest only for the days the money is used. Even they allow to be closed on the next day or any time. And maximum loan amount, there is no limit. Whereas in the banks, if it is there are caps for agreed gold loan, it is 3 lakhs. For other loans also, there are some small caps. Higher the amount, the probabilities also goes up in banks. So similarly, the mode of dispersal up to 20,000 it is dispersed in cash or a direct transfer. The banks mostly they entertain a customer, those having a bank account or required to open the savings account. So these are the few things. The repayment plans for the NBFCs, the interest is mostly collected monthly. The receivables for NBFCs, that is overdue interest is maybe around 3-4%, whereas the banks it is higher. The reason is the people going to the bank, they generally those who wanted to borrow a large amounts goes to bank, and and those who wanted a long term to be kept in the bank only, they go to the bank. So their receivables are high. And regarding customer service, it is the core focus of gold loan NBFCs, whereas banks, as mentioned earlier in the presentation, they are multi-product, and their focus for these small ticket short-term gold loans is lesser than the specialized gold loan companies. Next. And the advantage of most of these things are mentioned, and some of these are here. So, next. This is the presentation. So most of these are earlier covered through care presentation, and I hope I could add some more points here. And thank you for a patient watch by the audience, and any questions in this regard, I'm willing to answer. So through three major risks in this business, one is the price risk. How are you able to manage that risk? Second is the custodial risk. So this is very tempting even for the employees and outsiders also. So people, as asset can be easily liquidated, that temptation will be there. And third is the appraisal risk. You cannot melt the ornament to appraise it. So you should develop a third sense, even by looking at it and holding this at your hand, in your hand. You must be able to appraise that. This is one very important thing. And if an NBFC is capable of handling these efficiently, it can be successful. It can scale in the business.
Thank you, Mr. Nandakumar, for your participation and insightful views. Dear participants, we can now begin our Q&A session. You are requested to please key in your question. We'll have a gap of 2 minutes for the participants to raise questions. Okay, now we will start the Q&A session. The first question is, banks are increasingly focusing on gold loans. How do you see this impacting the gold loan NBFCs? Mr. Nandakumar,
Yes.
we request you to give your views on this.
So, few things here. One, the banks had a temporary advantage of 90% LTV. So, it was a time when the customers faced a lot of difficulty in repayment and also servicing their full loan. This gave them the higher LTV gave these customers an opportunity to renew the loan along with the interests when the LTV was raised to 90%. The second, the customers were solicited to clear the other overdues, citing the benefit of 90% LTV. But this is, I feel like the euphoria is very much short-lived. The gold prices were ruling, at some point it was ruling around 5,000 rupees per gram. So 90% means the LTV was 4,500 rupees. The banks were granting up to 4,500 rupees per gram. And now the gold price has fallen by 15%. Now it is around 4,200 plus rupees. So those customers borrowed up to 4,500 along with the accrued interest for 5-6 months. Yeah, around 10% of the portfolio now would be underwater. So now I hope the banks increasing euphoria has come down because of that. So I feel like it was a temporary phase.
Okay, sir.
Yeah, I think Sudhakar, it also is in consonance with our view that it's also a blue ocean that we are looking at. So as Mr. Nandakumar said, probably 30-35% is what has been catered to by the organized sector, and 65% of that, so more than double the size, still remains to be catered by the organized sector. And there is no reason why organized sector will not be able to expand the reach even further. I think it also is consonance with that. Obviously, as Mr. Nandakumar said, in an NBFC, the employee, by looking and touching at the ornament, is able to tell the purity and the value and give a first sense. Probably that sense of competitiveness and expertise helps them in turnaround of 5 to 10 to 15 minutes. But I think the overall the economics of the whole country, that way a large part of the sector is still unorganized and not regulated, and hence probably the practices may not be fair. That sector also needs to be brought into the organized sector, and that itself will give a lot of room of growth for all banks as well as NBFCs.
Okay, sir. Thank you. Next question is, what is your view on the sustainability of high yields on gold loans? For how long do you think the higher yields can be sustained by the gold loan NBFCs?
See, in India, as mentioned, the organized lenders, the portfolio, out of the total gold loan portfolio, only 35% are done. And also out of the total holding in the country is in the form of family gold, particularly rural and semi-urban, only 5% has come to the loan market at all. So the scope for that is very high. So regarding the yield, what is most important here for an NBFC, the rate of interest is around 18 to 21%. It starts with the 12%, etc. But the average yield what gold loan NBFCs are getting is around 18 to 21%. For the banks, it may be around 14-15%. It would be the IRR. Other than agri gold, where with subsidy, etc., the actual rate goes down to as low as 4%. So why the NBFCs are preferred over the banks? See, both have their own customers. For NBFCs, who are the NBFC customers? Mostly middle class and lower middle class. who wanted to avail for a shorter 1 month, 2 months, etc., 3 months, etc., where the processes are very simple. Turnaround time is around 15 minutes. When the branch starts at 9 o'clock or 8:30, he can leave the counter in 10, 15 minutes, and he will not lose his day's income, earnings, wages, etc. And coming for redemption also, the branches are open up to 5 o'clock or 6 o'clock. After the day's work is completed also, the customer can come. And also he can make a telephone call, everything will be made ready so that he can leave in 5 minutes if the settlement amount is transferred. So for a small ticket where the average ticket size is around 50,000, and also for a short term of around 60 days. What is most important here is the turnaround time, because otherwise the actual opportunity loss for the customer going to a bank is high. So still some customers have that advantage. If somebody wanted to borrow 10 lakhs, 15 lakhs, that also intended to borrow for 1 year, etc., etc., he goes to the bank because he can forgo a day's wage for the pledge, and later after 1 year, 1 day, half a day for redemption also, he can afford to have. So both have their own customer base, customer profile. The NBFC customers are mostly from middle class and lower middle class, whereas high net worth borrowers, they go to bank. The customer
Thank you.
profiles are different. Yeah. So the sustainability is, yes, particularly with the use of technology, online gold loan, where the facility of the customer getting a free safe custody, because for the custody we don't charge, and also the LTV, which is equal to 75%. He can use this 75% as a drawing power, like a bank overdraft. So he need to pay interest only if he uses the money. That also, if the money is used only for a day, he need to pay interest only for that day. These advantages are sustaining the yield at around 20 to 24%.
Okay, sir. Thank you. Next question is, there has been drop in gold loan prices in gold prices in the recent times. Are there any impact on the business and the ratings? So the first part we request Mr. Nandakumar to address.
So the major NBFCs, they have a long legacy of 20 years, 30 years, 40 years, etc. The NBFC form may be lower, but they have a long legacy. They have seen the prices ups and downs, even the price falling by 50%, 60%, etc., sometime. What you see, when the gold prices fall, there will be some increased NPA, which are realized from auction, through auction. So this will keep the AUM growth for 1 quarter, etc., muted. Thereafter, what happens is again the growth will portfolio will stabilize and growth will start. So it's a temporary transition from a higher LTV to a lower LTV. So as I mentioned in your presentation, this quarter, last quarter, the gold loan NBFCs, you will see the portfolio remaining stable. The collateral weight remains stable or growing, collateral weight, whereas the portfolio may be coming down to some extent. This is only a temporary phase, maybe during 1 quarter. So I think during the first quarter onwards, once it is stabilized at this price or started moving up, even if the gold price remains stable, the volume growth also start. So why the reason is people are coming to avail a certain amount of loan, say 50,000. He may have a few pieces of jewels with him, and according to his cash requirement only, he pledges. That's the reason why when the gold price moves up, the underlying collateral may not grow or sometimes degrow. So the reverse is happening when the gold price is down. So when there is sudden fluctuation like 20% only, the in one quarter you will see that the growth in both the volume muted or slightly going down.
Okay, thank you, sir. Now I request Mr. Sanjay Agarwal to give his view on impact on credit ratings due to fall in gold price.
So as you are aware, the gold loan companies as it is have a 75%, they provide loans on 75% of the value. So there is a benefit of 25% which is already taken. Plus most of the companies, as Mr. Nandakumar said, have been in the business for long years and they have been reasonable enough to understand the fluctuation in the gold market, and a large part of the loan is at a LTV of 0.6 or below. So the impact probably would be more on, let's say, the growth in business rather than the asset quality to start with. And even in banking assets, so what we have seen in most of our banking clients is that they have been cautious enough in terms of providing the LTVs, which are reasonable and they can take care of the risk of the business. So this business is, in the sense, the organized sector is now significantly mature. They take the appropriate risk mitigation strategy. They also educate the customers on the same. So we don't see any risk of significant changes in the credit ratings of NBFCs or banks due to the gold loan business. The growth in the business may be impacted by a temporary quarter or less than that. But I think, as I said earlier, this is a growing phase. That the country is growing, the organized sector is taking a larger shape. And as Mr. Nandakumar also pointed out, that there's a large amount of gold which is not yet brought to the gold loan market. So that also is another thing we need to look at. So that is how it is. We don't see any significant impact on the rating changes, whether it's in terms of the banks or in terms of NBFCs or in terms of a securitized portfolio. We don't see too much of changes.
Thank you, sir.
This is, we are not lending against metal. In fact, even though it is metal, it's metal plus. It's against family ornament, where the family members have a lot of emotional attachment. So we have seen a situation where the gold price fell 80% when the European banks, central banks started selling gold, their reserve gold. From $800, it has gone down to $200. Even then, I don't think any gold loan company reported a loss during that quarter, because the people are redeeming and not looking at the gold price of the day. It is their bangles, their earrings, their family jewelry. So the first priority when they have a cash flow would be to redeem that. This is one advantage.
Okay, sir. Thank you.
And the second thing, NBFCs like us have reduced the tenure from 1 year to 3 months. And we are able to reset the loan in every 3 months, 3 to 4 months, collecting interest and bringing down the LTV to the ruling price.
Okay, sir. Thank you. And the next question is, with the new entrants who are more online focused with doorstep gold loan, how do you see the industry moving ahead?
So the digitalization and improving the customer interface is going to be very important. With that, you will be able to acquire customers. I mentioned about the changing profile. Earlier, this was considered as a business product. Now, slowly moving to a lifestyle product, moving to the middle class. The reason is the convenience. The one is the free custody. They did not pay locker charges like if it is stored in a bank, if it is kept in the locker of the bank, then getting lockers in cities are also very difficult. So they get the free facility of free safe custody, and also they can carry the potential wherever they go. They can use their debit card for merchandise or withdraw cash 24 hours, etc., etc. Even midnight also, the transactions to the tune of several crores happen through online. So if we take our case, the gold loan portfolio, the online gold loan portfolio is around 2/3 now. It is increasing. So how quickly you are able to improve the customer interface, you will be able to attract the customers of a higher profile.
Okay. The next question is the share of organized and unorganized sector. Is it different for South and rest of India, or it is a uniform across the state?
So yeah, it may not be uniform. So the South may be around organized sector may be around 40%, whereas the rest of India it can be as low as 80%. In some states like Bihar, Orissa, etc., it can be like even 10%. So 1/3 is at the national level. This is the guesstimate. Because see, for the pawnbrokers and other unorganized sector, there are no records. Only some through some surveys, etc. Some assessments are made. So this is ever increasing. See, 7,000 to 900 tons of gold are imported to the country, and most of these are converted to jewelry, and most of these are bought by the women in the rural and semi-urban market. This is the ever-expanding landscape of gold loan in the country.
Okay, sir. Thank you.
What is the challenge for a new entrant? New entrant is this. So we need to have the reach through branches, these online facilities, then the appraisal skills. For example, now the NBFCs have several thousands of people who can appraise the jewelry even without using touchstones in a matter of few minutes. See, these are not coming in the form of one piece. These are coming, a customer is coming to us and he will have 5-6 pieces of jewelry. Every piece will have to be appraised. And these are affixed with the stones also. These what is, we cannot remove the stone, but at the same time you have to detect the stone. So that's why I mentioned a third set should be there.
Okay, sir. Sir, then one final question. The share of unorganized segment, the gold financier comprises of 65%. What are the things do you think would increase the share of organized segment in the overall market?
Yeah. You see, the government is always talking about demonetizing this idle gold. I mean, monetizing this idle gold. This monetization of this idle gold is very important agenda as far as the country is concerned. The estimate of gold in the country is around 35,000 tons. So if the value of that, if it is counted, it may be around 2 trillion US dollars. So these are lying idle mostly with the families. So the government has come out with the gold deposit schemes. They couldn't attract any family. They could get only some temple gold or some gold owned by some trusts, etc. The reason is these will be melted when these are accepted as deposits, which are not acceptable to the psyche of the family. So the only way to do that is monetizing the idle gold in the country, which is value is estimated to be billions of dollars, through loans. So your question on how to improve, yes, the companies should be free to expand the brand network. As you have mentioned in your presentation, over 1,000 branches, there are so many restrictions. And now what happens is these companies are large. So with a new line of thinking, the regulator, yes, the large NBFCs or expand, they would like to have more stringent regulation. So, which can, the result could be, there would be an indirect compulsion for large companies to convert as banking companies. So, if they are allowed to safely expand across the country, it will be really helpful for these companies to bring the unorganized sector to organized sector.
Okay, sir.
Yeah. Thank you very much, sir, for sparing your valuable time and sharing your views with us. We thank the audience for listening to us for almost an hour now. So in case you have further queries, you can still get back to us. And so that, Sudhakar, can you now close the session, please?
Yes, sir.
Thank you, Sanjay and the care team.
Thank you, sir.